On any given day, the market is telling a bunch of different stories. But today, February 9th, 2026, all those stories are starting to connect. We've got the Dow hitting a record high, Bitcoin in the middle of a brutal crash, and you have big tech making these massive, world-changing bets on nuclear energy. Now, these might seem like totally separate things, right? But they're not. They are all part of one giant shift in how money is moving around the globe. Okay, let's break this down.
So that's really the big question we're tackling today. What's the common thread here? How could these three massive events possibly be linked? Well, the answer shows us a fundamental rerouting of capital, of resources, and it's all being driven by a new force that is literally reshaping our entire economy. We're going to connect all the dots for you right now.
To really get what's happening, you have to look at the market itself. And right now, it is a tale of two completely different worlds. It's got a total split personality. On one side, you have this incredible, unprecedented calm, and on the other, pure, unadulterated chaos.
And that calm? It's captured perfectly in this one number. For the first time in history, the Dow Jones is knocking on the door of 50,000. It's the very picture of stability, of confidence, of steady, predictable growth in the traditional stock market. But hey, don't get too comfortable, because just across the street, in a different part of the market, it's a whole different ballgame.
Now this is what chaos looks like. In just one day, Bitcoin plunged to $60,000, only to scream all the way back past $71,000. That is an $11,000 swing. Think about that. So while the Dow is on a lazy Sunday drive, Bitcoin is in a high-speed chase, being thrown around by what some analysts are calling invisible hands, huge traders making moves that cause these insane price swings.
So what is going on here? Why all the madness? This isn't just a case of traders getting jumpy. No. The data is pointing to something much, much bigger happening just under the surface. All this volatility? It's not the disease, it's the symptom. A symptom of a huge pivot of capital and, more importantly, infrastructure out of the crypto space.
And that brings us right to the heart of the matter. What we're witnessing is a great migration. We're seeing resources, money, talent, equipment moving away from the business of creating crypto and flowing directly towards the business of powering artificial intelligence.
And the warning signs? They're everywhere you look. Bitcoin mining difficulty, which is basically a measure of how hard it is to create new Bitcoin, just took its biggest nosedive in 5 years. In plain English, miners are turning off their machines. At the same time, you've got a major tech investor like Ark Invest dumping its Coinbase shares, while Coinbase itself is seeing a wave of liquidations on its loan books. The whole ecosystem is feeling the squeeze.
And this slide just perfectly illustrates the fork in the road for the industry. On one side, you've got Coinbase kind of looking in the rearview mirror, running a nostalgic Super Bowl ad. And on the other, you've got a huge player like Bitfarms making a hard pivot to the future. They aren't just tweaking their strategy, they are getting out of Bitcoin mining completely to build out AI infrastructure in the US. They're skating to where the puck is going.
Okay, so what is this giant magnet that's pulling all this capital and focus away from crypto? It's one thing and one thing only: the absolutely insatiable, frankly mind-boggling demand for energy coming from the artificial intelligence sector. This right here is the real engine driving this entire market shift.
It's actually a pretty simple domino effect when you lay it all out. First, these new AI models need a shocking amount of electricity to run. Second, the tech giants building them, the hyperscalers like Meta, are hitting a physical wall. They just need more power, period. And third, how are they solving that problem? They're pouring billions of dollars into the most powerful energy source we have, next-generation nuclear, backed by tech titans like Bill Gates and Sam Altman.
But it's really important to understand that these huge shifts in tech and money, they aren't happening in a bubble. They're unfolding in a world full of big global challenges, which are adding all sorts of risk and pressure. And that pressure helps explain exactly why investors are getting out of speculative assets and into real, tangible infrastructure. All right, so let's zoom out for just a second and look at that bigger picture. Because if you want to understand why the money is moving, you first have to understand the forces that are pushing it. You don't have to read between the lines on this one. Here in the US, the vibe from regulators towards crypto is getting downright hostile. When a US Treasury Secretary says something this blunt, it's a massive red flag for any big institutional investor. It's a signal that the Wild West days are over, and that makes other, safer bets look a whole lot more attractive.
And this pressure isn't just a crypto thing. Look around the globe.
In Europe, entire industries are screaming about an existential threat from new green regulations. Russia's economy is teetering under the massive cost of war. And back in the US, political fighting is threatening to shut down basic government services. All this uncertainty makes investors nervous, and it pushes them away from risky bets and towards things you can actually touch, things like infrastructure.
So, after all that, what's the big takeaway? What does this all mean? Well, it's about seeing the convergence. It's about understanding how all these different forces are coming together to create a really clear picture of where to invest for the years ahead.
This chart really tells the whole story. The money is flowing from crypto mining to AI infrastructure. Why? Because that's where the demand is. It's moving from old-school energy to next-gen nuclear. Why? Because AI needs the power. And looking at the big picture, capital is shifting from speculative bets to productive, real-world infrastructure. Why? Because in an uncertain world, investors want something real.
So if you only remember one thing from all this, make it this. AI's absolutely ravenous appetite for computing power and the energy that fuels it is acting like a massive gravitational force. It's pulling money out of speculative ideas and anchoring it in the real-world infrastructure that's going to power our future. It's really that simple and that profound.
And that brings us to the final lingering question. We're seeing this great pivot right now, from digital code to the concrete and steel of the energy grid. As this massive trend continues to play out, where is the next great convergence going to happen? That's the billion-dollar question every single investor needs to be asking themselves today,